Let's get more analysis on the global leads influencing our local market at the open with Chris Weston from IG Markets in Melbourne. Chris, largely another night of traders sitting on their hands, no real volatility again. Iron ore, though, that was one thing that did move quite drastically.
Yeah, it did. I mean, we're trading. It closed yesterday at $90.30 or 90.3 per tonne, which is the lowest levels in many years. It's down about 4.7% on the session. I think you can also then look at hot rolled coil, which is obviously the steel price and the sheet steel price, and that was down another 0.7%, trading at the lowest level since November 2009. So, yeah, I think this will get largely flagged. I think if you look at the consensus at the moment for the third quarter, the iron ore price is still expected to reach $127 per metric tonne, which suggests we're going to see about 40% upside. Will we see that? I don't know. I mean, we're going to have to see a situation where some of these producers will have to cut back in the short term. But in terms of your point, yeah, I mean, that showed volatility. But in terms of the equity market, of which everyone obviously looks at, there is just no volatility at the moment in the US. I mean, we've traded I think the US market's closed with a variance of 1 point every day this week. The Dow, on average, if you look at the last 3 days, is traded on a 17-point average. Over the month of August, though, Kate, we're looking at the S&P having daily swings of about 0.7%, which is the lowest daily variance in terms of swings since August 1995. So there is no volatility at the moment. Everyone wants to see what Troika comes up with through September. Everyone wants to see what happens at the September 6th meeting, whether or not we get anything from the ECB and what happens further down the line. At the moment, in the short term, obviously, everyone's waiting to see what happens with Jackson Hole. But yeah, well, I think there was a bit of volatility in some of the currencies. The volumes in the currencies are still very low, like the volumes in the equity markets. But I think the currency which really stood out for me is the Norwegian krone. We did see their central bank coming out and saying that their economy looks relatively strong. I mean, they are actually talking about putting up rates at the back end of the year, if not into the beginning of their summer. So I think that's one that did very well. I've been talking about being long Norwegian crown versus the Swedish krona for some time. That trade continues to work a little bit. But yeah, I mean, if you look at the Aussie dollar, if you look at euro last night, everyone again sitting on their hands until we get some sort of clarity, which will we get from this weekend? I really don't think we will.
OK, Chris, what about what we're looking at today in terms of the local session? We've got reporting season continuing, and I might get some instant analysis just to put you on the spot. We've got Boart Longyear out with a $97.7 million US profit. That's up 31%, a dividend of 6.4 cents. We have, however, seen them cut their EBITDA forecast. It's now been cut from $460 million. And we're looking at capex guidance of 8% to $275 million. If you can just give us that EBITDA has been cut to $360 million to $390. Sorry, so many figures there to digest, but just perhaps your instant reaction to that.
Well, I mean, the actual numbers for the first half were bang in line, to be honest, Kate. I mean, the market was looking for 98 million, so 97.7 million was a good number. The dividend was expected to be at 6.4%, so again, no real surprises there. In terms of the actual price action that we've seen, I think what we're looking for in terms of earnings season, one of the thematics has been how the stock's traded going into the result. Now, a lot of these mining services companies, obviously this is very related to the drilling. It's got drilling services and drilling products as well. That's really what we're doing. I mean, the stock has massively underperformed year to date. It's down 14%. We had a nice bounce up from June, like the market did, but it's actually been falling into the stock price actually been falling into the announcement. So that's generally, for me, quite a positive sign. But then we just go back to your second comment, which was about the guidance. Now, for a company like this, and like for all companies, it's about the outlook. And if you say they're cutting their EBITDA by that much, that's a sizable amount. I know for a fact that the market was expecting them to reaffirm their guidance, so I'm not sure the magnitude of the drop, but I do know that people weren't expecting necessarily to see that size of a cut. So yeah, I mean, first of all, from a price perspective, I like the fact that it had been falling into the result, but I think given the fact they've cut their EBITDA by this amount would suggest that we are going to see it continue to fall and perhaps come on to test those June lows that we saw.
Chris, some other breaking news I can see coming across the screen now. Andrew Forrest buying $18.5 million worth of Fortescue shares, 5 million of those on market. We just saw the iron ore price drop off 5% overnight, 4% the previous evening. Fortescue under pressure at the moment. What do you make of this move?
Well, we saw an announce. So how many did you say he bought?
He bought $18.5 million worth of Fortescue shares, 5 million shares on market.
Yeah, well, he's been on a bit of a buying spree. I think he's bought. I think in June alone he bought $135 million worth of stock, or 135 million shares or so. So he's been on a bit of a buying spree. We did see post-market announcement coming out that he was buying another 20.1 yesterday. So I was going to talk about saying that he was going to do that. So there's looks like he's updated the market. So again, he's using this to average down. Obviously, he sees that there's going to be a bit of a rebound in the iron ore price, and they're perhaps not going to have to go down this situation where the market's concerned because of the iron ore price that they're going to have to refinance further down the line. So he's obviously very bullish. Now, iron ore stocks would in their own right be sold off relatively sharply today, given where we are with iron ore trading just north of $90 per metric ton. But yeah, perhaps this is going to send a market that perhaps that's what he's doing. Perhaps he's trying to send a message out to the market that things are okay at Fortescue, which we think they are personally. But you know, I think this could stabilise and support the stock for sure.
Okay, where do you see that iron ore price bottoming out?
I mean, I don't know. I mean, I do think you've got to keep. I think there's the cynic in me says the cynic in me says there's a lot of manipulation that goes on there, and you know the Chinese themselves could say that they could be looking to drive down prices so they can lock in favourable more iron ore prices and the renegotiations with BHP, Rio, Fortescue, etc. So it's always difficult to understand exactly how a price like iron ore is actually going to go. It's not the most transparent of commodities that we see. As I say, I mean, you know, I think in the third quarter my base case would probably be around about $110, $115 per metric ton, but you know that's just perhaps below where the consensus sits at the moment. But I think we'll get to the stage now where a lot of these producers will actually have to cut back on production, and that should support the price going forward. So yeah, I hope we're going to base around here. I hope we don't get too much further than south than when we see in $90. But I am not generally a commodities analyst, so I'm just merely guessing here, to be honest. But I'm thinking perhaps we're going to get a cut back in production, and that should support the price at these pretty low levels at the moment.
Yeah, Chris Weston from IG Markets, we appreciate that analysis. You're great when we put you on the spot. That's why we keep doing it. Thanks for your time. Just take